Hi, my name is Jim Parker. If you've been watching these videos for some time and you're finding the information useful and you're liking the videos, please do me a favor, take a moment right now before you forget and subscribe to the YouTube channel. I would really appreciate it. I really would. Thank you very much and enjoy the upcoming program. Welcome, fellow business brokers. I've got to just say, I don't know what to say, except for wow, because we were planning on doing this webinar for a few days now, and it just so happened that last night, the U.S. Senate passed the House bill, which is the Payroll Protection Flexibility Act. So it's really timely that we're sitting here today. We're going to talk about the Payroll Protection Program and give you guys updates on it. And we got that bill passed, and it looks like the President of the United States is going to sign that in law at any moment now, and he may have already signed it in law. So the information that we're going to be talking about today, every business broker needs to know this information. It's really, really important that we know this information. To get deals done, it is imperative and it's instrumental that we know this information. If you don't know this information, it could be detrimental in getting deals done. And in the worst case scenario, not knowing this information could cause major chaos post-closing that I don't think any of us business brokers would want to deal with. We're really lucky today because we have with us nationally known lender providers, nationally known CPAs, nationally known attorneys. So we're going to be talking about this information from different perspectives, financial, legal, and from lending, and as well, of course, from business brokers. About halfway through the webinar, we will open up questions from anybody that's listening to this program live to ask questions to anybody on our panelists, on our panel. So I just want to go ahead right now, and I want to introduce our expert the expert panel that we have today. And the first person I would like to introduce is Steve Mariani. How you doing, Steve?
Hello. Welcome, everyone. Great to see you all.
Steve is the owner of Diamond Financial Services. His firm has funded over $1 billion in SBA transactions and has been serving only the broker industry for almost 25 years. That's really impressive, Steve.
Thank you. Thank you. It's the brokers that make the world go round.
And if you don't know Steve, he's really active in the business brokerage community. So we got to get more involved in the business brokerage community. And another person that I think almost everybody in the business brokerage community knows is Bart. How you doing today, Bart?
Fine, thank you. Appreciate being here.
Bart, I'm really excited that you're here today. Bart is a CPA, and he's an attorney that specializes in tax laws regarding mergers and acquisitions. In addition, he has been working with the IBBA, state brokerage associations, and brokers for the last 15 years, assisting brokers in getting deals done. Again, he is a CPA and an attorney. Bart, again, thank you so much for joining us today.
You're welcome.
And then we've got Deborah. How you doing, Deborah?
I'm doing great, Jim. Glad to be here as usual.
Great, Deborah. I feel like I'm talking to you 2 or 3 times a day over the last month. I'm so sorry to be bothering you all the time. Deborah is an attorney.
I love talking to you every time.
Deborah is an attorney located in South Florida. She's been doing business and real estate closings throughout the state of Florida for 37 years. She has closed on literally tens of thousands of transactions. She's an affiliate member of the Business Brokers of Florida for many years, and she's very well known through the state of Florida, and she does a lot of work for the Business Brokers of Florida, donated work. Really appreciate it, Deborah. I'm really glad to have you here today.
Thank you so much, Jim. Glad to be here.
And last but not least, we have Tom Osborne. How you doing, Tom?
Doing well, doing well. Can you hear me now? I think my audio might be better.
You sound perfect.
Perfect.
Okay.
Now, only if you look that good. No, I'm kidding you, Tom.
Hey, look, you know, things that appear in this camera are larger in real life, you know. I just want to know that.
I like that about you. I agree.
Hey, look, Tom has been practicing. He's a CPA, and he's been a CPA for 36 years, and he's licensed in Minnesota and Florida. His firm is a full-service accounting firm. His business concentrates in small business consulting, business and individual taxation, tax planning, and compliance. And I can pick on Tom because Tom has been my personal CPA for, almost 30 years. Right, Tom?
Yeah, probably, yeah. Long time.
So we go back a long way, and I like him even though he's a Minnesota Vikings fan.
Oh.
No, thanks for joining us today, Tom.
Thank you. It's nice to be with you.
Like I said when we first started, the U.S. Senate just passed the Payroll Protection Flexibility Act last night. We're expecting the president to sign that any moment. So this is a really timely situation for us to talk about. Steve, I'm going to put this over to you, and if you can give our audience an overview of what is included in this act that's going to be passed into law.
Sure, I'd be happy to. And some of the things that were confusing me in the beginning was, you know, we're asking for 10 weeks worth of payroll, and they're demanding that you use it in 8 weeks. So that was the initial concern that was coming up from many of the CPAs and the clients that I had. So that was always an issue. And, you know, people right away started scrambling. How can we get an extra payroll in there? Can we bonus? Can we add people? Things like that. So I think a lot of that's gone away in this new bill. What they've done is they've extended that 8-week period to 24 weeks. One of the big issues with the 8-week thing was many of the businesses were still not open. Many of the states are still not open. Our state's still not open. So, you know, the people kept saying, how do you expect us to spend this money? Well, now they've extended it to 24 weeks that you have to spend that PPP money. So that was the first great thing that I think took the pressure off of a lot of business owners that I was aware of.
Steve, can I interrupt you right there just to make it clear? So, you know, in my situation, I've got PPP money of $23,000, and it looked like I was originally only going to be able to use $15,000 of it because it was going to be used for 8 weeks, and the rest of the money that I was going to get could have gone to overhead, things like that. But the overhead is not that much. So now you're saying I can use all that payroll money. I mean, I can use all that money for payroll, and just as long as I use it the next 24 months. Is that correct?
24 weeks.
24 weeks, excuse me, 24 weeks.
That's my understanding. That's how I'm reading it as of today. I haven't gotten a lot of opinions. This is only out a few hours. And I do have to apologize for all the previous misinformation that we've all given out the last 3 months. But as it changes, but my understanding today is now you have that 10 weeks worth of money to spend on payroll over 24 weeks. And you know, the way a lot of my clients are looking at it is, well, the payroll should take care of that. We shouldn't have to go after the other utilities and things that we'll talk about in a few minutes. So I do think, right, a couple of 941s, you know, 2, 3 941s, I'll let Tom and Bart speak more on that, but should make it a lot less cumbersome for the forgiveness. And really, this is coming from both sides. Not only do we have all the clients saying, hey, you gave us 10 weeks worth of payroll to spend in 8 weeks during our closed period, but also the lenders, if for anyone who has actually looked at the forgiveness application, you know, it's in its entirety, it's 11 pages. When getting approved was a page and a half. So, you know, people are now saying, well, you know, do I have to pay professionals? I can't fill out all of these papers. And conversely, on the lender side, there was a few check boxes. We approved the loans and send the money, and now we have to what? Underwrite the forgiveness portion. So they were getting it from both sides, both the client side and from the lender side, because what none of us want is the lenders to be taken out for another 2, 3, 5 months while they work through this forgiveness. So that's the biggest thing, I think. Yeah, the simpler they make this for forgiveness, the easier the world can get back to business. And what I'm really referring to is all the lenders that have really been consumed by these things for the last 2 months. So that's the first major change.
Right, interferes with that SBA lending that we normally do.
Absolutely. That's the big thing we need back.
If I can make one comment, you've got to realize that restaurants, on the other hand, do not want to use it for payroll because they're not even open. I talked to someone in Massachusetts today, and the state of Massachusetts is the 3rd worst state in the country, and they cannot open restaurants to this day. They're still totally closed down.
Well, maybe the good thing with this is that, it is going to go 24 weeks now. And one of the other things that was in that, that act that's about to be a law was the 60%, moving it from 60% from 75%. Steve, you want to touch on that?
Yeah, so the down is, there's an up and a down to that particular rule. They did, the previous, before today, it was 75% had to go to payroll, and then up to 25% could be used for the additional rent and things like that. So they did lower that to 60% has to be to payroll. But the big caveat here is, if you can only get to 59%, none of it is forgiven, is my understanding of the rule.
That's mine as well, yeah.
Yeah.
We're working on trying to change that though, yeah.
Right, and before it was 75%, but any portion under 75% that was not directed to payroll, the remaining payroll piece would still be forgiven. And this is saying if you don't hit the 60%, none of it is being forgiven. So that was a little bit of a shock. So the way it seems now is 75% now becomes a 60% cliff, is what I'm reading.
Okay. Bart, and I'm sorry I interrupted you before. What do you think about that? I mean, how do you think that'll affect things? Bart?
Oh, I'm sorry. Give me that again. I thought you asked.
I was just saying, I interrupted you before. With the 24 weeks and it going down to 60%, do you think that'll help out the restaurants a little bit more if they're able to, open up in the next month or so?
Well, yes, that's one of the big things. With the restaurant said that they don't want to pay so much for salaries and payroll because they don't have the people coming back. As a matter of fact, this law also has a special clause in there. If a former employee refuses to come back, voluntarily says, I don't want to come back, there's a special exemption there for those people. And I see Steve nodding his head. So Steve, I don't want to take it away from you, but that's another upside for the restaurant industry.
Can I ask you, that brings up a question, Bart. So what happens if the business owner ends up firing the employee, but replaces the employee with another employee? They're still okay, right?
Well, you got to realize there's two different rules. One rule is a numbers game, and the other rule is the dollar amounts game. And you got to realize that the Treasury Department came out a week or so ago with their own rules, claiming that they're now saying that a full-time employee must be 40 hours, not 30 hours. And if it's a person works less than 40 hours, they got to be prorated. So we've also got to deal with the Treasury rules that came out in addition to this new law that was passed.
Oh, so what happens?
Treasury rules, by the way, were 26 pages long.
Oh.
And they're still giving money. They're still giving out money.
They are. Yes, they are. They are. You're absolutely right, Deborah.
The PPP money, you're not able to use it for employees that only work in 30, 35 hours a week?
You can use it, but you've got to prorate the amount because you're not hiring them. They're not working for 40 hours. So when you're getting reduced hours on some of these employees, there's a problem. And restaurants have a unique problem because they usually don't even pay minimum wage because of the tipping policies that they've got.
But Tim, going back to your question, I'm sorry.
No, I was going to say maybe Bart can go to some of the businesses too that have Schedule Cs, but really don't have employees.
That's right. Now there's a special rule for Schedule Cs and for partnerships. Well, with regard, especially matter of fact, when you look at the Treasury rules, the Treasury regulations, and I've got them in front of me here, I can read it to you. There's a little calculation. The maximum loan forgiveness now is going to be 8/52 of the 2019 individual payroll, which came out to be 15.38% of the 2019 computation. But it maxes out at $15,385 a week.
Or $100,000 a year.
Yeah, or $100,000 a year. So this applies to Schedule Cs. And Tom, when you've got unincorporated businesses filing your Schedule Cs, there's special rules for them, and that rule also applies to partnerships.
Right.
And it indicates they said there is no forgiveness now for any health insurance or retirement programs for Schedule C filers or for partnerships.
Mm-hmm.
So, and you got to realize, and your brokers should know this. I know run into this an awful lot with regard to brokers because they refer to LLCs. But Tom, you know this yourself with the practice. An LLC has no tax return. It's either a defaults to a C, a Schedule C, a partnership, sub S, or a C corporation. So the rules, when they say, well, LLCs or Schedule Cs or partnerships, the statement of LLCs bothers me because you think the Treasury Department, the IRS would know that.
Mm-hmm.
Sorry, go ahead.
Taking a lot for granted. Jim, I want to talk to you about that full-time employee that you mentioned just a few minutes ago. So going back to that 30-hour employee, let's say you had two 30-hour employees, that would equal, you would take 10 hours from one and call it a full-time and another half of a full-time, because
I
it would
like
be
what you think, Steve. I hadn't thought of that one.
right? It's full-time equivalents in my mind. That's what I'm
Full-time
thinking.
equivalent.
You put all the hours together and you divide by 40, and that's how many full-time equivalents I'm thinking that you have, unless I'm incorrect, but you guys are the experts.
Yeah, that's a great. I love that, Steve. Deborah,
Tom, any thoughts on you with filling out those application forms? Those 8 pages?
The application form?
Well,
Yeah.
Steve, I think another good thing in the law over here is they now have 5 years to repay the loan instead of 2.
That's correct. Yeah, if they're not forgiven.
Right.
Right.
And the banks don't want that. By the way, I've talked to several bankers, especially community banks.
That's
And
right.
community banks have helped a lot of people. If you've got brokers, by the way, who haven't applied yet, I would strongly recommend that they apply for their own companies, their own businesses, okay, to community banks. We find community banks are very sympathetic to the smaller business person, the person wanting $25,000, $50,000, $60,000 type thing.
Tom, I'm going to ask
Yeah.
you these questions. You know, that PPP money cannot be used for the corporation's portion of the tax of taxes. Is that correct?
That is correct. I think when you're looking at what they will allow, I think it's state unemployment tax, and that's about it. So it's salaries and state unemployment tax. But they did the application. They also had health insurance in there too.
Okay.
For a corporation, for a corporation or not a partnership, for a corporation.
Okay.
You got to be careful with double dipping. As Tom said, you can't deduct your salary as an expense of the business if you're using the PPP money to pay it.
Right.
Correct.
Mhm.
The loan forgiveness is not taxable, but neither are the expenses that you use the loan proceeds for. So it still washes out. You know, it's
Yes.
not.
You know, for everybody that's listening right now in the audience on this program, I just want to say this will be recorded. It will be on YouTube. I think this is going to be one of those videos that you're going to probably want to watch again after this. Steve, what other things were in the Payroll Protection Flexibility Act that's going to be signed into law by the president?
Well, one of the things I think that kept coming up over the last few weeks is furloughed employees. You know, they have either laid them off or furloughed them for a bit of time. And what I'm hearing is a lot of people are not getting their staff back, even though they're trying desperately. There's a local HVAC company that I'm close with, and she said, 2 of my people just don't want to come back.
The hair salons, they don't want to come back. But you know what's interesting? Think about this. After June 30th, that unemployment rate is going to drop tremendously, and people are not going to be able to live on that.
Yeah, and
We're
that's
getting
where
$600, I remember.
that's right. Pay the piper is going to come in. But the HVAC company, they just fired the 2 and they replaced them. You know, and the furloughed employees. So this act does actually, or this new highlight does say, if you have made specific attempts to get these people back and they won't come back, you can still count their payroll. It also goes into detail to say, if you try to replace them extensively and can't replace them, you still will be forgiven. So I think those are 2 big things that matter from what I'm hearing on the street the last few months, where employees and workers just won't come back.
Yeah, but Steve, you got to be careful. You can't fire the employee. You've got to have proof, and it's got to be documented that the employee has refused to come back voluntarily or because they've got the virus or something. But you
Right.
can't, if you fire an employee, like you said, they fired 2 employees.
Okay.
By firing those 2 employees, that creates a problem.
Bart,
Can you lay them off? No, if you lay them off, I guess you wouldn't be hiring them back.
Bart,
So what is,
You've
Bart,
got to
let me ask
attempt
you
to
this
hire
question.
them back.
Bart, let
And
me ask
if
you
they
this question,
voluntarily say, no, you've got to have some proof, because the burden of proof is going to be on the taxpayer.
right?
Bart, let me ask you this question though. A business owner, one of the employees is just not doing well, not being a good employee. Something happened. They got to fire that employee. They can fire that employee and hire somebody new at the same amount of hours and same wage and everything, and still get that forgiveness on the PPP. Correct?
And
Or
they
not?
got to be careful, because the law is very clear now. It says that they allow borrowers, which are businesses, and they said the language sometimes is vague. I mean, remember, this has got to be interpreted. and Deborah knows this as an attorney, that a lot of these laws, the interpretation is very, very important.
Yeah.
And it says, I'm just quoting, it says, the language has been deemed vague intentionally, as many businesses will not be able to come back to full size because of many factors, some factors being indirect causes from federal guidelines. Okay, so they want, we're going to ask, the American Institute, for example, is asking for more clarification on this very issue that you talked about.
Okay.
You know,
Yeah, it just doesn't seem
one
right.
person doesn't want to come back and you hire another person to replace him. But remember, your loan amount was based upon the previous employee's salary, either in 2019 or part of 2020.
That just doesn't seem right. They have to fix that. I used to be able, as a business owner, you should be able to fire an employee and hire another employee. You should, you can't be pigeonholed at that point. That's my perspective as a business owner.
Well, you got to read the details and understand. I mean, I understand it, but I deal with interpretations of laws, especially tax laws, which I work with every week, and it's amazing. I get one federal court in the lower district of Manhattan decides one issue. The federal district court in Texas on the same matter makes a different decision because they interpret a word or a sentence differently.
I just want to go on record as saying, this is really important, is that my team is phenomenal. So I would never have to do that, but I was asking for other business owners. Sure. Steve.
Good clarification, Jim.
Steve, was there anything else that you wanted to talk about with the new act? Does that pretty much cover it?
I really think that they're trying to make it simple. I mean, I always look for, well, where's their motivation and what are they thinking? And, I've been talking to lenders on an everyday basis here and borrowers being all these PPP recipients. And these are the same concerns. What they're all focused on is the forgiveness period. I mean, there were 4.4 loans issued. Well, hell, it's all about making this forgiveness piece easier. And that's what we're all focused on.
Let's switch to that right now. I think that's a good turning point to switch. Tom, how easy is it going to be, or how hard is it going to be to get the forgiveness on these PPP loans? What do you think?
I think for a business that just says payroll, I think the documentation is going to be fairly easy, especially now with the more time that they have to spend the money on payroll. Should be as simple as having payroll records, maybe 941s. But I think the payroll registers will probably be enough to show proof that they spent the money. If they spend all the money on payroll, I think that's pretty much going to solidify it for them.
So you think it'll
as long as
easier then, Tom?
Tom, are you aware that the Treasury Department came out and said that the banks and the government can take up to 5 months to approve a forgiveness?
I saw that.
Yes.
Okay, that's.
Well,
150 days.
We're going to go down that rabbit hole in a second. Bart, how hard or how easy do you think it will?
Changes.
Wait, Tom's talking. Tom, I can't hear you.
Okay, well, with all the changes that have been happening with this program since it came out, I've been advising my clients to wait as long as possible to apply for forgiveness because it's ever changing.
Right.
Yeah, we're helping clients all over the United States, brokers and businesses all over the country. As a matter of fact, we're also helping some accountants and attorneys. Law firms have been calling us saying, Bart, you interpret this. And there's a major concern as to filling out the forms. And by the way, one other item, Jim, just to let you know, the Treasury Department has come out and said that, how we had a ruling that if the loan was under $2 million, there was a presumption that they weren't going to be audited. That is now out the window. They've now said that at the discretion of the SEC, they can audit any loan that was made where forgiveness is asked for to verify the accuracy. And there's specific wording in the 26-page document that came out by the Treasury Department.
So what do you see, Bart? Do you think it's going to be easy or hard for business owners to get this forgiveness of the PPP loans?
I would like to think Tom is correct that filing the form and keeping it for payroll is going to be easy, but it can be longer before they're approved. And then the question comes is, do they start paying off the loan at the 1% rate while they're waiting these 3, 4, 5 months?
I think they extended the 1% out. I do believe that based on the newest, it says once the determination for forgiveness or not has been determined, the deferment ends.
Correct.
And your 1% starts. So I do think, but I do have a question for the experts here. When we're going, and this is something I haven't researched yet, and you guys might know, from 8 weeks to 24 weeks. So people in their 8-week cycle now, not getting to 100%. So they go 10, 12, 14 weeks, and now they've reached their 100% forgiveness level. Do they apply for forgiveness? Would you suggest they apply for forgiveness soon as they meet that 100% of their PPP loan amount in payroll?
Tom, what do you think? I would.
I would, yeah. If there's nothing hanging out there, if they know they're going to get all forgiven, there's no need to wait.
Yeah.
I would, because if that business is going to go up for sale, that makes a big difference.
I
Good.
agree with Deborah. That's
Very
what I
good.
was going to say. As a business broker, I would say, yeah, let's do it. So this is the rabbit hole I want to go down now, because, you know, the people that are listening right now, we're all business brokers. We got business brokers from all over the country. We got business brokers from Canada, from England. We got people from all over the world on the call right now. And if they're selling businesses here in the United States, I guess the first thing, there's two things I want to attack. The first thing is, if the PPP money is not all used up by the time you sell the business, can the new owner take advantage of the remaining portion of the PPP money?
Is it a stock deal or an asset deal?
Good-
I guess
good
that's a question I would fire back to you, Deborah.
I would say
For
in
an
a
asset
stock
and a
deal.
stock deal. Give us a
Yeah, I believe
scenario.
in a stock deal, you could do that. You'd have to have a lot of different protections in place for both the seller and a buyer, but they can do that in a stock sale. But one of the things that always concerns me is the lender, and you know, do you need to get approval from the lender? What do you think about that?
Well, one of my things I understood that recently they were passing something, or maybe it was in this act, that and maybe I'm wrong, that the PPP money doesn't necessarily get attached to the EIN number, and that it could be dealt in an asset sale, or am I wrong? Steve, I saw you shake your head.
The FEIN number goes with the corporation.
Right. It is written to the corporation, but under an asset sale, if they're in the middle of the PPP, I can tell you how we creatively structured one. What happened was the selling broker called me and said, we're going to just have the buyer assume the rest of this PPP loan as a liability and transfer it to her under an asset sale at the closing. And I said, no, we're not going to do that. I'm not going to allow my buyer to now take on a $322,000 liability based on the seller's employees and things like that. So here was the structure me and the buyer's attorney had come up with that really, I felt, protected everyone. So what they did was, he specifically took that PPP money and put it into a separate account and only used it for payroll. So the transaction closed, it was about 6 weeks, I guess, into the PPP money. So what I had suggested was, because he kept it so clean, that they have, and this deal closed a week and a half ago, that they closed and she leased the employees from the EIN that did retain the PPP money, but every single payroll that he funded after her takeover, she funded into an escrow account and matched funds.
Mhm.
So if he paid $30,000 for payroll, she put $30,000 into an escrow account. And the way I suggested this happen, well, come time for forgiveness, if it gets all forgiven, that's wonderful. And if there's money left in that account from his PPP money, she gets it. If it's not forgiven, well, all the money's still there because he's already paid his staff. So he would have been paying them anyway. And she has funded that account. So the difference since she's taken over. So there's no liability or exposure from either side. Yet they have to work together for the PPP.
That
That's
does
an
create a
episode,
potential,
Steve. That's
but
what
that does
we would
create
do.
a potential problem, because the buyer did not sign the certifications on the PPP document. And without signing the certifications and getting it approved by the local lender, that entire thing is subject to being thrown out. You got to realize that, you know, I'm looking at these laws that are being interpreted, and these banks are very, very sensitive. And this is one of the key reasons the Treasury Department came out with their rulings, was because they said they're going after the question of certifications on the second page of the form was simply, you know, check off a box, and people didn't give them a second thought. The buyer did not check off those certifications. It may not be.
Well, Bart, what about the fact?
Very sensitive, very hesitant.
Bart, what about the
Thank you
fact
so
as
much.
well? The
Deborah,
seller's
what's your
not getting
opinion?
cash.
Excuse me, Deborah, go ahead.
the seller's not getting cash from the sale, doesn't that also cause a problem with the PPP?
Possibly, yes, it's another area of contention.
Yeah.
Well, my thinking, and the attorney was agreeing with me, if the seller's corporation left, and that's who the EIN is to, and that's who the PPP is, and if he retains those staff and those employees and continues to pay them, and is just leasing them back to my buyer, I mean, I didn't, but I also didn't read your 26-page U.S. Treasury document.
Deborah hopefully will join me. I work with attorneys all over the United States.
I know you
There
do.
are attorneys. As a matter of fact, I now teach classes for attorneys for the continuing education course in 35 states. And let me tell you something, you'd be shocked if you found out the little of business transactions
Oh, yeah.
a lot of attorneys know.
I know.
Right.
I'm sorry, Steve, I don't know the background of the attorney, but you asked me to get you out of a parking ticket, I wouldn't know the first thing to do it.
Right. No, I'm exactly with you, Bart, and I agree. But I was thinking what Steve said about escrow. If you escrow
It helps.
and you hold on to the escrow, then at least you have to repay that loan when it's not forgiven.
Right.
Yeah,
Yeah,
but
I was looking for no liability on either side.
Tom, when you fill out this 8-page application to get the loan forgiveness, that would have to be signed by the seller, not the buyer, because the
Right.
seller's the one who applied for it first.
Exactly.
Well, let
So
me
the
ask you
legal
guys this
document
question.
would have to hold the seller responsible
Mhm.
for getting that through.
Right.
Right.
And we started this conversation, maybe I got a little confused, because we started this conversation as if if a buyer could use the remaining portion of a seller's PPP money, if there is some there. And in all honesty, I think it'd probably be pretty much used up at this point if you're just getting under contract now. But my other question, this is, hitting home for me, is I've got a deal that just went under contract where it's $800,000 of PPP money that the seller had. So by the time we close, the seller will have used up all the PPP money, but it might take, like you guys said earlier, 4 or 5 months
To the end of the
for
year.
forgiveness.
To the end of the year, Jim.
I'm sorry?
To the end of this year.
To the end of this year. So, how do we sit there and make sure that the seller doesn't get caught, in left field all of a sudden, 4 months after closing or 3 months after closing, that he's now responsible for the $800,000 of PPP money?
Yeah, I would have the buyer sign and apply for it and make sure the financing institution approves the buyer. And then the legal documents would have to be written in such a fashion that the escrow account helps an awful lot, Steve, the way you worked it there. That would be a big, big help.
Yeah.
But I would make sure that the buyer was also on the hook with the local bank in case it was not forgiven and there was an outstanding debt of $800,000, even though it's payable over 5 years.
And I wouldn't mind you guys all talking about this for a few minutes, because I think right now what's happening right now is there's business brokers all over the country that are making deals happen, getting things under contract, and there's PPP monies that the seller has applied for. And we're asking everybody at my company, every seller, we're asking them, did you apply for PPP money, and how much did you apply for, and when's that going to be used up? And when we go to do contracts, we've got to keep that in mind so that, it doesn't catch the seller or the buyer off guard. And I'm sure that a lot of brokers right now listening to this program have that same question. I know that you guys, touched on it, but I wouldn't mind each and every one of you guys kind of telling me your little bit of input on that, on how we can handle it or structure it, or, whatever you guys want to say. Steve, you want to start with you, Steve?
Yeah, it goes back to what Deborah said before, is it an asset sale or is it a stock sale? If it's a stock sale, it just transfers. I do think that the buyer has to do a little bit more due diligence on what the money was used for and where the PPP money has gone if it was taken out by the seller. But a stock, I think, is pretty straightforward. I think it just gets dicey with the asset sale. We did one transaction where it was just 2 weeks into the PPP, and what we did was we just made the seller pay it back, and then the buyer applied for their own right after the closing.
The only thing, Steve, if I can interrupt you for 1 second, and maybe Tom or Bart can comment on that too, is if you're a buyer coming in.
Deborah, I think you froze up.
Money yourself with another affiliated company, and that's going to make a big too.
Deborah, could you repeat that? I think you froze up for a second.
Okay, what I was saying is if you applied already for PPP money as a buyer, and with an affiliated company, that can make a difference when you go on there for this is buying from the seller. Because a lot of companies now own 3, 4, or 5 different businesses that have applied for PPP money and now are acquiring another company.
Right. Yeah. And I haven't gotten into too much of the affiliations. I haven't seen that come up where my client, I do have a couple clients that have applied for it too, but they're all under separate EINs. So I didn't see any issue there. And I haven't really gotten as deep into the affiliations as a lot of people have. But I didn't see any problem with their 2 different companies with 2 different EINs as long as they followed the rules.
Well, again, when you say follow the rules, I've had several clients in the state of Florida, as a matter of fact, that have got more than one company, and we had a problem. One client applied to 2 different banks. You know how they've done multiple applications, right?
Mm-hmm.
Well, both banks approved them, and one bank approved his holding company instead of the individual operating companies. And the other bank said, no, you have to apply for a loan for each individual FEIN number. And I had to get on the phone and talk to the bankers because they were fighting. The 2 bankers both wanted his money, wanted the loan, and it's a problem. Deborah hit a sensitive spot when you have a company, a business that has more than one FEIN number, more than one operation.
Right.
We do get into a situation there.
Okay.
Very, very sensitive.
What about one that's just, that's just one company, straightforward, small business, selling for $500,000. The seller has, $30,000 or let's say $50,000 of PPP money. What's the liability of the post closing? And let's say the seller's already used all the PPP money, then we close, but it hasn't been forgiven yet. What are we looking at? Let's say it's an asset sale, because most of what we do is asset sales.
Forgiveness as soon as possible. If he's used up all the money, we're now into June. Okay, he can apply for that forgiveness as part of the transaction and get it done. And the closing can go on subject to him getting it. If he gets it done, fine. If he doesn't get it done, he's got to pay back the money.
Well, that could be 150 days based on the newest information.
Yes.
But does that mean we can't close on a business for 4 or 5 months because
No. You can still close on the business, but there's a caveat in the legal documents from a legal standpoint. There'd be a caveat in there, subject to a complete paragraph, 2 paragraphs, whatever we need, dealing with the payoff and the forgiveness of the PPP. What if it does happen or if it doesn't happen?
Exactly.
With the escrow.
Good point. They can take loan proceeds to cover the PPP money and just hold it in escrow until that forgiveness comes through.
That's
or
correct.
not.
As I said, Steve, earlier, I liked your escrow concept.
Yeah,
Okay.
That's what we do. We escrow.
All right, great. And everybody on the phone call, Steve, Deborah, Tom, Bart, you guys all think it's going to be pretty easy to get the forgiveness? I mean, I'm thinking from a logical standpoint. I mean, really, I'm thinking from a logical standpoint that you cannot give that much money out to so many small business owners, and it kept these small business owners, a lot of them, from going out of business. And then you're going to make it really tough for them to get that forgiven. And then you're going to turn down a lot of people. I just think that it would destroy so many small business owners in the United States that they have to make it pretty easy for the forgiveness. That's not a legal thing. That's not an accounting thing. That's just a common sense.
Well, but you're being too logical. So
Yeah, I was just going to say logic doesn't work.
That the government has now come out and stated that if a person who received the PPP money could have gotten money from another person, another creditor, that their credit was good, that they had another way in which to operate their business, they've got to give back PPP money. They will not be forgiven.
Anybody else want to address?
I didn't read that, and I don't want to, and I don't even want to know where it is.
This is, I can show you the documents that I've read on the interpretation that now the SBA is saying that if you could have had and borrowed the money elsewhere and you had good credit and there was no need for you to get the PPP money, they did not intend for you to get that money.
And Bart, let me just go one other step.
Sorry, Steve, I'm not making it up.
Steve,
I understand you're not making it up, Bart, but this is my
Deborah
point.
seems to be agreeing with me.
I agree with you.
This is my
Bart,
point on this.
Let me
Just
go
a
to
second,
another
Deborah.
point that no one's hit on. Okay, the other point is that let's say that you at this point, you have a buyer who's willing to even put that money in escrow, and you even haven't finished the PPP monies being given out yet. You could be in default of the note that you've received from that lender because you're changing the business structure, even in an asset sale.
Yeah.
And most of the times in the note, it's going to have that language.
Yeah.
So people aren't even looking at that. That's a default situation, which has nothing to do even with taxes.
That's correct.
So
And by the
you
way,
guys
this whole
saying-
concept also affects the valuation of a business.
Right, right.
So,
As Tom indicated, if you're paying your payroll with PPP money and you're paying your rent and your utilities with PPP money, then it cannot be deducted on your tax return as expenses, which also affects the way in which we're valuing businesses.
Right, no, exactly,
We
exactly.
value
So there's a
businesses
lot
all
of
over the country, and we're getting,
permutations, is what I'm saying.
I did 2 valuations today, reviewed, I didn't do them, excuse me. My staff did them, but I reviewed them today, and we sent one back to find out exactly how we're gonna calculate it because of this situation.
number one, this is my thinking. Number one, I think it's really, excuse my language, bullshit that the government comes out, they offer this program to help small business owners survive during a pandemic. And then weeks later, month and a half later, they change the rules of the game. I just think that that is wrong. I just don't think, not just wrong, but it's going to kill small business owners. And the second point is, listening to you guys, you're scaring me as a business broker. Should we not be doing deals right now if there's PPP money involved? Is that what you're saying?
But Jim, let me just answer by one thing. You made an interesting comment. You said to help small businesses stay in business.
Right, right.
That meant, as far as the government's concerned, that means that there was no other way they could stay in business because they didn't have the financial ability to pay their bills. Those are the people who should have borrowed the money. There are a lot of firms who didn't need the money, who also had other credit standings, and yet they took the money. That's what the government says, we want the money paid back. That's
Well,
why they want up to 2 months for the banks, the local banks, to determine whether or not the application to forgiveness is correct. And that's why they're giving the SBA 3 months to determine whether the forgiveness will be given. I'm telling you, based on what I've read in my experience, it's not going to be that easy to be able to get forgiveness unless it's very, very clear cut that the business, as you said, Jim, the business needed it to survive. Okay. And
Well,
then
what
they
about all
used
the
it-
employees that you wouldn't have kept employed had that loan not come through? Had they specifically put those in the initial application rules, I think people would have taken a different stance.
Yeah,
To
I may have
change
let-
it after is
Yeah,
against the
Steve.
law.
I'm not
you're
saying
perfectly
you're
right.
wrong. I'm just
As a
saying
business
the
owner-
law's been changing ever since they came out with it.
Right.
Steve hit it
Right.
right on the
My-
head.
my-
Steve hit it right on the head. As a business
been-
owner, I may have made the decision without the PPP money. Not saying I would have, but I would have might have made the decision to lay people off.
Right.
Right.
Okay, but
The
you're gonna
encouragement
you're
was
gonna
to
have to
keep
prove
everyone
that
employed.
in your application to forgive the
was-
loan, Jim.
That was the intent I
So-
made along at the
Okay.
time.
So, hey
Well,
guys,
my question is,
I want to open up in a few minutes to our.
Wait,
to our-
Tom had something.
yeah, go ahead, Bart. I'm
Yeah,
sorry.
like, one of the things that I saw, I think it was around April 15th when they came out with the clarifications on available capital. What standard are they applying to that? If you have a small corporation without a line of credit, but if you have owners in that small corporation that have assets, is that a standard that still apply that you have to contribute capital rather than borrowing money from the PPP loan?
Let me-
I mean, there's a lot.
Tom, let me answer that by saying I have one client who has a $500,000 line of credit. They've only used $400,000 of line of credit. They turned around and applied for a PPP loan and got approved for $65,000, by the way, from the same bank that holds their line of credit. There's a question that's come up now, whether that would ever be forgiven, because they could have increased it. They didn't have to increase their line of credit. They could have used it from the line of credit. And the bank is on the hook. And by the way, the banks will also lose their fees for processing these loans if they're not approved. So that's a specific instance. And by the way, that was a liquor store.
But
They
again,
were considered, by the way, they were considered a critical business because
they are
people need-
critical.
Goodness.
They are
I
essential.
agree with
I'll drink to
They are
that.
definitely essential.
Yeah, thank
That's what I'm
goodness.
talking about. Is that liquor
Well,
store?
but
That liquor
still
store
goes back
could have been. They could have laid people off.
Right.
They could have made that decision. I don't want to eat up my line of credit. I want to reserve that, and I'm going to lay people off right now because that's the good business decision to make because I'm not selling as much as I was. I don't know. Well, anyways, we got to move on.
My question is, would a business owner have to go to a personal line of credit if they don't have available line of credit in their corporation? I mean, that's available credit. Is that a standard they're going to apply to these people? I would think they wouldn't, because the corporation is a separate entity. But when you look at when these rules changed, they were very vague.
I'm not disagreeing with you. I'm just telling you that's fact.
Yeah.
And Bart, I'm not arguing with you. I'm just frustrated,
Oh,
I guess, more than anything. I mean, you think there's protests going on right now. I'll make sure there's even bigger protests going on. We got to move on.
Quote this. Let me just make one quote so that there's no misunderstanding. It says the SBA stated that if businesses could receive funds from other sources, the loan will not be forgiven. Both the business and the bank will lose. That's a statement from the SBA, May the 22nd of this year.
I don't know. I don't know how they're going to build to oversee tens of thousands of these loans, but we got to move on. Bart, I'm not arguing with you. You're right. I'm not. You know more than I do. I'm just speaking more from my heart than my
I
legal
appreciate
knowledge.
it, Jim.
I think you 100%, Jim.
Hey, Steve, I want to touch on 7A loans real quick, and then I want to open it up to the attendees, the people that are listening to the program right now, and hear their questions, because they always have excellent questions. Can you give us an update on the 7A SBA loans right now, Steve?
Sure, and I think what everybody's experience is the PPP has taken a lot of lenders off the map for the short term. They should be coming back now. I'm seeing banks now begging for PPP applications. So that makes me think that their staff is going to get back to work. If not now, then soon. I can tell you the lenders that I'm working with are starting to come back. But we did lose probably 50% of our lenders to this. So we typically keep between 6 and 8 in stock at any given time. And right now we're working on 3.5. So the other thing is that they don't know how to approve loans anymore. Much like Bart mentioned, how do you appraise? How do you value? How do you look at these financials? Because aside from those few essential businesses that have either lived through this or done well through this, the rest have been impacted on some level. So right now, lenders have actually started pushing up down payments. So we're hearing on the street just from our few lenders, now the 10% is pretty much tough to get done. We're looking at a 15 or a 20% down payment. Also, something that's not on my list is seller notes. Lenders are starting to push a little bit more for seller notes, which I've always been against, for those who know me. So they're looking for a 10% seller note, maybe a 15 or a 20% down payment. So they are tightening a little. I am expecting that to change as this stuff starts to get by us.
Steve.
Yes.
Steve, I'm sorry. And I with that seller note, is that going to full standby, or what would the standby?
No, they're just looking to reduce their exposure. So they're really just looking to do a 70% LTV as opposed to a 90 or an 85 these days. That's all I'm hearing. And really it's because no one knows where the economy is going or what these businesses are going to look like in 6 months.
This is that's another thing. Like a couple months ago, we were excited and we were all talking about, Steve, Deborah. I remember us talking about the situation where, hopefully Marco Rubio was pushing, and hopefully people would make the SBA loans where it was 90% guaranteed instead of 75% guaranteed. That looks like that's out of the window right now, or is that something that could still happen?
I'm hearing that there's still the 90% being talked about a little bit, but I'm not seeing anything in writing anymore. I hear that the fee waivers is off the table, but so we've kind of pushed that to the side. It was just like the PPP money running out, but because they put so many restrictions onto the application process, a lot of lenders just backed away from it, and that's why the PPP money is still there. It was supposed to be, according to the initial volumes, expired weeks ago. So
Right.
Yeah, so they slowed that process down.
What, 139 billion left or something crazy like that?
I heard a little over 90 as of just the other day, over 90 billion.
Yeah, we were all afraid. We were all afraid that they were going to run out of that money, and we actually created, Steve, Deborah, myself, Business Brokers of Florida. We created that petition, and we had a lot of people sign it to make sure that the 7A loan got refunded, and it ended up that the PPP money was never ate through all that. We never ate through all that PPP money, and everybody thought we were going to run through that money. So, So Steve, again, I guess the talk about waiving processing fees for the buyer on the SBA loans, I guess that's been put on hold as well, right?
Yeah, that's my understanding. That's off the table too. I think lenders are just trying to deal with the dust that's in the air right now. I don't think they're really, doing much. They've gotten a little bit more conservative, and they're really just waiting to see where this all plays out. The secondary market is a little bit weak, but it's still there, which helps the lenders, most of the lenders that we work with, as opposed to the portfolio lenders.
So we're moving now from a 10% for the last 2 or 3 years. We've been doing a 10% down payment, which was fantastic. That was the best. I think when they passed that, January 2017 or January 2018?
Right, that's right. It was
10% down.
January 18 when they
And that
lowered
was
it
the
to
best.
25.
That was the best I had seen it in 20 years. And, now I guess it's still legally by the SBA standards, it's still 10%, but the banks are moving to 15 to 20% down to reduce their exposure. They're looking for seller financing as well wrapped into that to reduce their exposure. Please, and I realize right now that a lot of lenders are kind of like, it's a little scary. So maybe a lot of lenders are kind of sitting on the sideline. It sounds like you lost half of your lenders that you use. Please tell me, and please tell the rest of the audience that they are keeping the 6-month principal and interest being paid by the federal government if you close on a deal by September 27th, or at least you get the bank, the bank loan number, the SBA loan number by then. Are they keeping that at least?
Well, it is, and the more I research into whether it's the PPP number, or the PLP number, or it's the closing, it looks like it is that loan needs to close by 9/27. That's the consensus.
Oh,
And
it's
I
not the
haven't heard it
number.
from SBA, and I haven't heard from anyone other than lenders' interpretation. Again, like Bart says, everything in our world is open to interpretation when they get into this kind of minutia. But the word on the street is it's going to have to close by September 27th, but still get 6 months worth of payments. So there is still some incentive if they're close to making the deal right now.
Okay. All right. Well, at least I'm not going to completely cry tonight after this webinar. I'd like to turn it over to people right now that are listening, the audience listening to the program. If what you could do is if you could raise your virtual hand, and you do that on the bottom screen where you got, I don't even know where you do that in the Q&A. No,
Yeah,
not the Q&A, but you raise your
there's no
virtual hand.
hand on this one, I don't think.
And what I'll do is I'm going to make you so that you're going to see your name come up on the screen. When you see your name come up on the screen, unmute yourself. Okay, make sure you unmute yourself. And then when it's your turn, I'll call on you, ask the question. Please ask the question in 30 seconds or less so we can go through as many questions as possible. And when you get on, please say your name and what city you're calling from. That would be fantastic. We've had Roberta for some time now asking a question. And
Hello, Roberta.
Hi, Steve. How are you today?
Hi, Roberta.
Hi, Deborah. How are you today?
Roberta, where are you calling from? I know where you're calling from, but let everybody else know where you're calling from.
I am calling from Deerfield Beach, Florida.
Okay, great. What's your question, Roberta?
I had a customer, and this was the first one that came to me with this situation, that was told that he had received an emergency disaster loan. When he went back to that same lender and tried to submit a PPP, he said that loan was combined with the PPP. You're not allowed now to go ahead. And I hadn't seen anyone else, or no one's ever told me that they've received those monies in one tranche, if you will. Is that something that any of you have seen? And do you think that the lender is correct, or is it something that he should take up with perhaps the SBA?
Art, did you have a comment on that?
Yeah, we've had several people. They said you could apply for the separate loans, but if you did, they would combine them in one. So what the bank did was probably appropriate.
Okay, all right, fair enough. I told them I was participating in this and would ask the experts. Thank you.
Thank you, Roberta. Manny, can you hear us?
I can hear you. Can you hear me?
I sure can. Where are you calling from, Manny?
Also from Deerfield Beach, Florida.
Okay, great.
My question, I think, is probably best suited for Steve. This has to do with the transaction that I'm trying to get a listing on, and the gentleman, according to him, a forgiveness of his mortgage because he's got a current 7(a) loan, and he's afraid of listing the business because once the business closes, if it does close in the soon future, he's afraid that he's going to be asked to pay that back, that forgiveness of that mortgage. What are your thoughts on that?
So what I think you're referring to is the initial 6 months worth of payments once the CARES Act got signed, where he was 6 months worth of his payments were initially waived. Is that what you're referring to, Manny?
Yeah, I believe that's the way he explained it, because he does have that 7A loan
Right.
with the SBA, and then
Right.
they told him that he wouldn't have to pay that. Is that forgiven, or is that just moved to the end of the loan?
No, that was not deferred. There was a deferred period that a lot of lenders would. I asked you if he was referring to that 6 months worth of payments. Just like that 6 months worth of payments on new loans that close by September 27th, it's the exact same rule that covers him. So those payments are gone forever. They're not going to be deferred. He never has to pay them back. He can sell that business tomorrow and not be affected by that 6 months worth of payments. Yeah, that's a done deal. It's like as if he would have made them himself.
Okay, very good. Thank you. So I appreciate the answer.
Sure.
Hey, thank you, Manny. Bill, can you hear us?
I can. Can you
Great.
hear
Where are you
me?
calling from, Bill?
Hudson, Ohio. Bill White Jr. with Murphy Business. As I recall, last time I saw Steve Mariani, we were on a boat in Lake Tahoe.
Yes, I do recall.
But, my question is this: I've got a couple of deals that are going to close asset sales over the next several months, and I just want clarification. It sounds to me like in order for an SBA loan to be approved for the buyer of these two businesses, that somehow or another at closing, that the seller has to pay off that debt or arrange some sort of legal arrangement, as Bart's been talking about too. I'm just trying to see how dicey this is going to be if I'm expecting a closing in 2 months, and they both took PPP loans with the expectation of having some forgiveness. Just confused.
I think, Steve, you hit the nail on the head when you said use the escrow method if they want to close.
Yeah, if it's an EIDL, the way I'm looking at the EIDL now, the EIDL does come with a UCC filing, and it's more like a real loan. So if it's an idle loan that the seller received, and the way I'm looking at that is it's a liability that's got to be taken care of at closing because there's a UCC filed on the business.
You
If it's
handle that like a
PPP,
regular loan, right?
Exactly.
Yeah.
Exactly. That's just a liability the seller's got to take care of at the closing to transfer the business free and clear. But on the PPP, you do have to get into the details and look at more. What I was telling them in the beginning is, if we're a week and a half away from closing, let's just close and let the seller retain those employees for that week and a half. If we're talking about 3, 4, 5 weeks and we want to close that transaction. So I think that each scenario is a little bit different, but I don't think that there's any that you can't work through. Had I known about that PPP earlier in that one transaction, maybe we would have allowed that buyer to assume the liability. A week and a half before closing or a week before closing, when they called me and said, hey, we want her to assume this liability, I wasn't going to let that happen and then throw a monkey wrench into credit,
What do you think, Steve, you think you're going to then approve a buyer? Because that's what we're talking about, is having the lender go back and approve that buyer.
What I cared about, my buyer was in closing. I didn't want and it was a $3+ million loan. I didn't want to go back to credit to say, hey, she's going to assume that liability if it's not forgiven. That was a big consideration. I didn't want to. We allocated the money for her to pay her payroll. We allocated all her expenses moving forward, which is why, going back to what Bart said, the escrow was not a problem because we had that figured in. She was okay. We allocated money towards that.
Right.
So, her funding her payroll into an escrow was no consideration at all. Not a no-brainer. She would have been incurring those expenses anyway. But I think it depends on where exactly it is in the transaction.
Yeah.
Like I said, if we're 2 weeks from closing, I'm going to tell everybody, as much as I hate to put off a closing ever, we're going to wait the 2 weeks and get this done. But so I think scenarios and certain circumstances will affect the way you handle that PPP moving forward.
I think right now the buyers and sellers are not going to like some of the things that we tell them, and I think we need to have a new motto during this time, and that motto being that it's not a perfect scenario, but these are definitely not perfect times right now. So, Scott Levine, where are you calling from?
Everybody does everything in writing, Jim. I'm sorry. I just want to say everything is writing and documented properly, and that's the most important things too.
Oh, absolutely. I mean, anything that has PPP money right now, I mean, I'm immediately turning that over to an attorney. It's got to be turned over to an attorney.
Yeah.
You know, it's got to be handled properly. I don't want to be involved in that mess post-closing, be responsible as a broker. Hey, Scott Levine, can you hear us?
Yeah, Jim, I can hear you fine. Can you hear me?
Absolutely. Where are you calling from, Scott?
Boca Raton.
All right. I knew that.
Yeah, Jim, listen, I think I'm going to heed your advice and I'm going to listen to this again, but I'm going to do it under medication. You know,
Or alcohol.
Yeah, exactly. I mean, I think we're watching sausage making here, but yeah, I think I agree with your comments that I'm going to leave it to the attorneys because this is far too complex for a simple business broker for me to handle. Deborah, I just have a quick question for you. If it's an asset sale, so we're creating a new entity, is the buyer protected from any PPP liability that the seller would have? Not in a stock sale, strictly an asset sale.
In an asset sale, as long as you have everything, it would have to be documented properly, because remember that seller is not yet forgiven. But there is no UCC on that PPP filing, but I'd still be extremely careful and make sure everything is documented.
Okay. Again, I'm going to defer to the attorneys because it requires a level of expertise I'm not going to try to master.
I agree. I totally agree with you, Scott. Thank you so much. Sheila, are you there?
Thank you.
Yes, I'm here.
Where are you calling from, Sheila?
I'm calling from beautiful Boise, Idaho.
Nice.
I'm also with Murphy. Yeah,
Glad to
Murphy
have
Business.
you from Idaho, Sheila. What's your question?
Well, my question is, first, I just wanted to say I agree with you, Jim, on your earlier comment about the frustration of this program. And one more quick comment before my question is, when all of the business owners applied, no one knew how long or how bad this was going to be. And all of them were encouraged, especially by their bankers, to apply. So now with the rules changing, I think it makes it very, very tough for them and tough for us, but mostly for them. So I think that the last question was answered for me, but I just want to restate it a little bit differently. So I have a deal, it's seller financing, no SBA. The seller received PPP money. It's a restaurant. Believe it or not, we're under contract at full price, amazingly, right? This is an iconic.
Go.
Yeah, well, don't celebrate till I have check in hand.
Oh, I agree with that.
But the challenge is the seller has been closed, of course, but working on repairing the restaurant, cleaning it and whatnot, using the PPP funds to pay for payroll.
Mm-hmm.
So the buyers want her to reopen. So she's reopening here in a couple of weeks. Closing is scheduled for July 3rd, but all PPP funds are likely not to be spent. She, of course, wants to make sure that she can get those funds forgiven because that's what reason she took the funds. So what do we need to do? Again, it's a seller note, attorneys involved in drafting the documents. So no bank. Anything we should do?
Boy, it's a very sensitive issue. I would make sure that the attorneys are business attorneys, transaction attorneys.
Right.
Deborah, you know that, and it's as opposed to litigators. Okay. And there's no guarantee at this point that the PPP money can be forgiven. I would also suggest that perhaps the 8-page application for forgiveness be part of the legal documents so that the parties understand exactly what the basis is that the seller is going to use to try and get it forgiven. Deborah, anything you want to add to that?
That's a good idea, Bart, because at that point you can see if it really went to employees or not.
Good.
Yeah, and if there's a payroll company, that helps tremendously.
Yeah, we recommend all companies keep the PPP amount in a separate account,
Right.
so everything is easy to transfer. We do not want it commingled. Sheila, does that help you at all?
Yes, I will advise the attorneys, and yeah, she's a business attorney too, so I feel good about her.
And Sheila, what's kind of nice too is that there's a loan, okay? So you can always have set off and adjustment provisions as well if you need them.
Right. Okay. All right, thank you.
Thank you, Sheila.
Thank you.
Carolyn, are you with us?
I am. Can you hear me?
Great. Where are you calling from, Carolyn?
Las Vegas, Nevada. I'm
Oh,
with Transworld
welcome.
Business Advisors.
Just opened up gambling today, I heard.
Yes. Suppose we'll see how that goes. And we're interested more in some of the restaurants, though, to be honest. At least those locals, right? So anyway, my question is, so I have a couple of clients. So one received the PPP. A week after receiving the PPP, one of the employees resigned and left. Okay, so you guys have talked a lot about furloughs and those things, but I want to talk about resigned. Okay, so they resigned, they left, and about a week or so later, they were able to replace them. That person only stayed about 5 days and resigned. And so now they're working on their third employee. So as long as that's documented, are they going to be okay? And especially now that they have 24 weeks, we're going to be okay?
My answer would be, yeah, it sounds like it's okay for me. They're still spending it on payroll. Everything says employees can come and go. So I don't think there'll be a concern there at all.
Okay.
Personally.
Okay, and the other client received both the PPP and the other one, I forgot what it's called. Is it EIDL or something? Yeah. Okay, and so we aren't under contract yet, but we have someone that's interested in that. It is an asset sale. So his question today to me was, how do we handle that? So I've listened a lot to the PPP, so I kind of think if he pays that back, he's good with that part. What about the other side? Does he have to pay that off?
Absolutely. In my opinion, yeah, the EIDL loan is a straight loan. That's, forget its name, EIDL, or where it came from. It's a liability from the seller that has the UCC filed on that business. So when they do the lien search and when your closing transaction happens and they pull up the liens, that UCC from that EIDL loan is going to be there. So that's got to be paid like any other liability.
Yeah, it's just liability.
That's not a forgivable loan. That's just treat that as a regular loan.
Okay. And then he said something about, and I thought since SBA that this couldn't happen. I told him I think he had to pay it off, but luckily it happened right before our call. So that's perfect. But he said, can they take it over? They can't, can they? Can they assume that loan?
SBA loans are assumable.
Oh, okay.
It never typically happens.
Okay.
And now I'm only going to talk about my 7A experience, so I'm not going to address EIDL exactly.
Okay.
But every SBA loan is assumable. But the big caveat there is they don't let the original borrower off the hook, which is why they're never assumed.
So it's not like a
The only
lease.
time I've had that, Steve, is when I had it through something where it's,
Right.
and then I
It could happen. Right.
the person
She
off.
broke up.
Yeah.
Deborah, you broke up. I didn't hear
Yeah,
that.
you broke
The
up,
only
Also,
time
I
you've
think
had
a stock purchase, we can do that.
Stock purchase. Okay.
Or when the buyer is real strong. If the new buyer is really strong and makes the original borrower look weak, then a lot of times they'll exchange them. But usually they just want to add another name to the loan, and it's not usually helpful.
Great. Okay. Nangelin? I'm sorry. Am I pronouncing your name correctly?
No, it's perfect. Nangeline, perfect.
Nangelin, great. Where are you calling from?
Miami.
Miami.
Yes.
Yeah, all right, great. What's your question?
Two questions. First, I wanted to know what is the final rule? Because the final that I had is that was posted in April 30th. And I wanted to make sure that it's the same that you were talking about, the final rule with the SBA.
Are you asking for the final rule on the SBA?
Yeah.
Today's you mean. Yeah.
It's because there are many documents outside, so I just make sure that
It doesn't stop. Our website has the latest on them, but they're coming out almost daily. Every webinar I'm doing, I'm apologizing for the 3 previous because of all the misinformation. And it really isn't to any fault of my own. It's because they keep changing the rules.
Oh my God, yes.
So, you will find documents called interim final rule, but I think there are Bart, 3, 4 of those out already?
Yeah. Four of them. Yeah.
Yeah.
So that's
So-
wanted to make sure.
Jim,
I've been
you're
talking
gonna put this out so
to
people
and
can
they don't know.
program in the future. I would strongly suggest you put a caveat that when all of us are speaking today, we're speaking only as of today.
You're right.
Not as of
Right.
March. Put a limit on,
Yeah.
a caveat that whatever we've said today may not be proper in a week from now.
Right. You know what?
Yeah.
You're absolutely right. We've been experiencing that the whole time, the last couple of months. Things change every couple of days. You say something to a buyer or seller today, and 2 days later, you're calling them up and saying, "Hey, everything I told you the other day is not correct." So,
But you
yeah,
know, Bart,
send me an email,
I think
remind me
this
of
is,
that when I'm editing this, that I put that disclosure on the front of this video.
Yeah, it's great.
Thank you.
Please
no,
remind me.
but
I've
you
got
know also
horrible memory.
Okay.
that Bart is this is our new normal, really. Every day changes. so,
Right.
so and yeah, and my second question is, I still think that it's a gray zone in the PPP when you're independent contractor and the unemployment. Especially in my case, that I also hold a realtor license. So from the Realtor Association, they push, you have to do this, you have to do this. You have a pandemic assistant unemployment on the other side. So you have the PPP. And I say, oh my God, you are in the middle of what? And for me, it's important to understand because the first that you get is a warning. It's going to be a felony. But nobody said what is the real rule in an independent contractor. I think it's still great. So I just wanted to know your comments or your opinion in this particular situation when it's a realtor and a business broker.
Best advice I think any of us could give you is simply to stay current and keep up with the changes as they come forward.
And it could be helpful too to stay in contact with your lender.
Yeah.
Good point.
And your
Very good.
CPA.
Yes. Mhm.
And Bill Blair, are you there? Bill, you're on mute, so you got to unmute yourself.
Am I there?
Yes, you are. Welcome, Bill. Where are you calling from?
Tampa, Florida.
We're at in Florida?
Tampa.
Tampa, great. What's your question, Bill?
I want to make sure I use the correct terminology. I applied for an economic injury disaster loan. You're calling it EDL. I was under the impression that that was a grant, not a loan, a grant to be forgiven. Did I get that wrong?
Bart?
I believe so. They did say that under $20,000, they were grants, but once you got over that level, they were loans.
Now, this was for $10,000, and it was my closing attorney that recommended that I apply for it. Oddly enough, at the end of the application, they said you were approved, yet here I'm still waiting 2 months later.
Mm.
I'm sorry, the time period is terrible, and nothing we can do about that. But if you
Yeah,
only
I
have $10,000, it was considered a grant.
So
I'm
he doesn't
sorry
have to
for
pay it
10.
back.
Yeah, okay, thank you so much.
Okay.
Thank you, Bill. I appreciate it. And do we have Dana? Are you there, Dana Cole?
I certainly am. How is
Well,
everybody?
welcome. Where are you calling from?
I'm calling from Arizona, from Tucson,
right.
Arizona.
Great.
Yep. So just 106 degrees here today, really comfortable. So I've been doing this a while, and the way I've approached this is just simply that while there are not UCC filings on the PPP loan, and while the sellers have absolutely assumed that this is, at least at the beginning, this is free money and this will be forgiven, and that was the strong impression at the beginning of all of this. But now that is changing, and people are starting to lose their footing a little bit. I'm looking at it like it is a liability to the business, and I'm doing either holdback provisions or escrow provisions, period. And that's how I'm looking at it. It was something they chose to do during their tenure and their business. And if a buyer comes in, it just has to be their continued responsibility. And that's the way I'm looking at it. I'm trying to keep it really cut and dry because I don't see any other way to do it. Or else it becomes too fuzzy and too back and forth. And so it's part of my initial conversations with sellers. If you got the PPP loan, well, you thought it was completely forgivable and free money when you got it, that's shifting. And I'm just wondering if that hard line is something that you feel can work, or I'm being too rigid about it.
I'd be happy to talk to that. Now I'm going to put myself in the seller's shoes just for a second. So if I'm turning that business over and I have 3 weeks left of my forgiveness, I'm counting on the buyer to keep those people employed, or we're going to be working together one way or another. Either that, or I'm going to pull the business off the market until I get my forgiveness. I'm not going to just walk away from that money. The big concern, I think, now, especially with this 150 days of review possibility with the lender, God knows what that does. But the way I'm approaching it is, it's written to the seller's EIN. If it's an asset sale, he's walking with it. You know, the way I look at that is, if it were a car loan and he was leaving with that car, I don't care what they owe on it. You know, it's his liability and it's not my buyer's. And my responsibility and determination is on the buyer's side. So that's how I'm approaching it. If your seller's in trouble post-closing, that's not me. I don't think that there's any recourse to the buyer in that transaction if it's an asset sale. But, you know, there are attorneys on the call that can clarify that.
Anybody want to jump in?
I think you're taking a very, very conservative approach by considering it a liability, and perhaps the seller has simply got to swallow that. And yes, I think the probability of most people is not the probability, excuse me. The thought of most people when they borrowed the money was it was free money from the government. We now know it's not just free money, so that the seller's got a problem. It's not the buyer's responsibility, as Jim said, or excuse me, as Steve said. Taking a look from the buyer standpoint, they could care less, but the seller's got to accept that responsibility going forward. So as considering it a liability, that would be a liability to the seller. And I like the concept, Steve, I'll keep coming back to you because I love the concept of possibility of putting the money in escrow for the time being.
Right.
You know?
Right.
Cover.
Great. Bill, did you have another question?
I do. Yeah. So is there a resource that I could recommend to the closing attorneys that are on the deals that I'm working on for a couple of asset sales, a resource that would help them to get up to speed on these legal issues in case they aren't up to speed themselves?
The biggest resource that you can do is get to know someone like Steve and someone like Tom and Bart and myself, and then there's your resource, a whole team of people, because there's nothing really online that's going to assist anybody. It's really dealing with stories and facts and knowing and getting the knowledge of these deals behind you. And if you find a knowledgeable attorney that does business transactions, that's going to be a big step ahead for you.
Yeah, Bill, the only other thing I can tell you is check out our website because we write articles every month. And just today, one of my staff is writing an article on the new law that we expect the president to sign today. And we put those up, they're free of charge on the website. And we also do blogs on these and a lot of these programs as Jim is sponsoring this particular program we've got today. So there are sources, and your attorney should be smart enough that if they don't know this area or they're not specialists in the area, to look for someone who is. So
right, and I think too to know a good CPA is very important because as an attorney, see, you have a little different situation, Bart. I'll take care of everything with the closing, but I'm not going to touch any tax issues.
See, we handle the accounting, the tax, and the legal issues because it's all we do for a living.
Right, but most business attorneys don't do that.
Over 150 transactions with brokers all over the country, and we work with attorneys who hire us and accountants. And we teach CPAs and attorneys on these things.
Bart,
so,
what's your website address, Bart?
Pardon?
What's your website address?
Very simple, taxplanning.com, www.taxplanning.com, all one word.
Taxplanning.com. And I also want to throw this out there too right now. Steve, I was speaking to Steve earlier this morning, and on his website, they have uploaded the entire Payroll Protection Flexibility Act. Do you have it up on your website yet, Steve? You said you thought you might.
Yeah.
What's your website address?
Today's latest is up there. The actual bill is up there. Prior to the webinar, it went up there about 1 o'clock today. So yeah, if you're looking to read, I don't know, 1,300 pages, and the CARES Act and every single interim rule, you can visit our website, which is at easysba.com. They're all there with no interpretation. You'll have to find our webinars to get the actual interpretation, which I think is the bigger thing than the 1,200 pages of reading.
But you're right to sleep. Yeah.
Yeah.
Absolutely.
Looking forward
880
to it.
pages is the initial CARES Act, and I think, most of us on the call have looked at all that.
That's why you have research assistants, Steve.
There you go.
Or you got to be like Bart and be on vacation sitting on the beach reading all these tax laws. We're only
there
going to
you
take a
go.
couple more questions right now, but I do want to, Deborah, if you could give your website address, that'd be fantastic before we take a couple more questions.
Yes, thank you so much. And that'd be www.carmanlegal.com.
And that's Carman, C-A-R-M-A-N. Yes. And then what about you, Tom? What's your website address?
I'm muted here. There we go. My website address, my firm is Kelsey Osborne, so it's www.kocpas.net.
Fantastic. Thank you, Tom. Henry, can you hear us?
Yes. Thank you, Jeb. I'm in
Where are you
Miami,
calling from?
Florida. Miami, Florida.
Great.
I
Thank
have
you
a
for joining us,
two-part-
Henry.
Can you hear me?
Yes.
Okay, I have a two-part question. I have been reading more than once that there's a simplified procedure for establishing forgiveness if the loan is less than $2 million. And I'm trying to get confirmation if it really is simplified or not. And the second question is, and I guess is really geared more to the CPAs. I happen to be a CPA as well. But the IRS in a notice about a month ago expressed its position that to the extent that these PPP loans are forgiven, an equivalent amount of the business expenses, which could be the payroll, could be the lease payments, would be disallowed. And it's based on their interpretation that it's treated similar to the rules for tax exempt income. The problem is that the CARES Act legislation, as I understand it, did not contemplate this. My question is, in this last bill, I guess that was just introduced and passed by the House, is there anything addressing that issue about the disallowance of expense? Because, I mean, it's really felt as punitive by many of these small businesses that in their planning, they didn't think they would have this tax issue now on top of, qualifying for the forgiveness. So kind of long-winded, but it's a two-part question.
First of all, the process has not been simplified. Okay, that's an easy answer. I think we all agree on that. Okay. Second, you're correct. The IRS did come out recently and said that they're not going to allow double dipping. And you simply got to inform your clients that if they're getting paid to make payments to their employees and for rent or for utilities, they can't take a tax deduction on their tax returns. They're just not allowed. Now, there have been some congressional individuals that have said that they don't like what the IRS is doing. This has happened more than once in our history. Even when we had years ago, we had different laws that were passed to help individuals. The IRS took a different position on them, depreciation, investment tax credit, and so forth. In this business, I think too long now, like almost 40 some odd years. Seen too many changes over the years. But having said that, just be aware that your clients are subject to filing taxes and subject to the Internal Revenue Service, which is an arm of the Treasury Department. So yes, be very careful. They can't double dip. Okay. Anyone else? Want to add to that?
You want to add anything to that?
Well, yeah, traditionally, for solvent people, when there's debt forgiveness, it is taxable income. So when they passed this law and made the debt forgiveness non-taxable, the IRS stepped in and said, well, you're not going to be able to get free income and not pay tax on it, plus get a deduction on top of it. So all they're doing is equalizing it. At the end of the day, it's still not going to cost any. It's not going to have a tax impact on any of the people that have their loans forgiven. It's just a wash.
Yeah, Tom, one other thing. You've opened up a little box. If the loan is not forgiven, okay, if the PPP is not forgiven, then it becomes a loan to the company,
right?
And therefore the whole thing is different. Okay,
absolutely right.
It's a totally different environment, and there is an expenses that can be deducted. So that's
all expenses. If 100% of the loan is not forgiven, all the expenses you incurred or spent or paid for with that money will be deductible.
Right.
Thank you.
That wasn't covered with the PPP money, correct, Tom?
Tom.
But only the part that was not forgiven
Yeah,
through the PPP.
the part that's not forgiven becomes the loan.
Right.
And to the extent that that
Right.
portion, those loan proceeds are used to pay expenses, the expenses are fully deductible.
Right.
Great.
Hey, Bart, I have a question for you. You know, there's some, it's kind of murky on how they're dealing with partnerships with guaranteed payments and how they're calculating how much the partners are going to be able to include in the application to get the loan forgiveness. I've seen conflicting information where it could be based on their share of income coming through on the K-1 versus what's on the what they're getting for guaranteed payments. Because some partnerships don't have guaranteed payments, but they still have income from self-employment. Is there, you know, if there's anything that's been clarified with this new law on that?
From what my understanding is, partners are going to be classified as if they're unincorporated.
Bart, you
Individual would
froze
not
up.
have a salary as such. So guaranteed payments would be considered the same as if it's increasing the profitability of the company, their shares. And you got to look at the K-1 forms to go through that information. I don't know if that helps you or not, but that's the Treasury Department. The Treasury Department came out in the 22nd of May and said partnerships are going to be considered the same as unincorporated individuals using a Schedule C.
Okay.
All right, great. Hey, we got to wrap it up. We've been on the webinar for about an hour and a half. Does any of our panelists want to say one last thing?
This is a time where winners are going to be winning. You know what? It's turbulence helps people. So you know what? Capitalize on it. This is an opportunity. You know, crisis presents opportunities. I think everybody on the call needs to look at those opportunities and move this world forward and get us through this. And I'm counting on all the brokers in the country to make that happen.
I just want to say one thing too. We've come across a little bit negatively as far as how you can sell businesses during this time, but I think we can all figure out how to do this properly so businesses can be sold during this time when we have these loans outstanding.
Yeah. Deborah, I agree 100% with you, but one final word, just be careful, all you brokers, to make sure you get proper advice as to what the law is at the time the transaction's there. Very, very critical.
Exactly.
Yeah, I'm going to repeat what Bart just said. I think all of us business brokers need to be aware of what's going on and everything we talked about today, and we should be able to be talk to our sellers and buyers about this. But at the end of the day, we need to be turning our sellers and buyers over to attorneys to be handling this kind of information and putting it down when it comes to a contract. And I want to touch on one thing that Steve said, and that's this, that it's not how you do during the good times that determines who you are. It's how you do during the bad times that determines how you are. And I'm going to agree with what Deborah said too, is that I think I'm a little worried as a business broker. It's tough out there right now. You know, I keep saying this, the last couple of years, it's been really easy to get deals done. You know what? That party's over right now. You know, and this is a time period that's going to separate the big boys from the kids. And you know what? There are deals that can be done out there. You might have to work a little bit harder. You might have to work a little bit smarter, but you can get deals done. And I'm staying positive. I think most of the people on this call are staying positive. And I want to end it right there, but I want to say to Steve, Deborah, Bart, Tom, I appreciate you guys taking so much time out of your day to give us this advice. And I know each and every one of you guys is extremely knowledgeable. You guys make a lot of money per hour, and you're sharing that information for free to all the business brokers out there, and you're improving our industry, and I greatly, greatly appreciate that. One last thing to everybody listening right now to this program. Next Thursday at 2 o'clock, we're bringing Steve Mariani back again, and we're going to be doing a webinar on how he's going to be giving suggestions on how to creatively put deals together right now during the COVID-19. There's a lot of things that need to be discussed. And I think every time you see Steve on these webinars, he gives ideas on how he would put deals together. He's going to be sharing information on that with us next Thursday at 2 o'clock. I will be sending out emails to that, and I will either tomorrow or this weekend send out a link to this video on YouTube. I encourage all the business brokers listening to this, listen to this video again, because this information is extremely, extremely important. And one last thing, work hard, work smart, and keep making those buyer-seller connections. Until next Thursday, take care.